Hello. Today we are going to explore a very, very important topic relating to property investing in Africa and the Caribbean. If you haven't watched my videos, please watch and subscribe. They are within my YouTube channel. My name is Douglas Oppong. I'm author of the book Pocket with a Whole 7 Pillars to Support Your Financial Habits and Decisions. It's available on Amazon. I'm a multiple award-winning property investor. And I am taking you through some of the things that you need to do if you're a diaspora living in the USA, Canada, UK, Europe, Australia, wherever, and you have a property back in your home country, or you are thinking of investing or have investments there, how I can help you turn that property into an income generating asset. Today we are talking about how to finance real estate property investing in Africa. Principle number one. A lot of people, for you who live in the UK and USA, you are already familiar with mortgage options. You know, there are a lot of mortgage companies that have sprung up in African and Caribbean countries. For example, in Ghana at the moment, where I'm shooting this video from, there are multiple companies or banks, financial institutions that offer mortgages. In fact, one of my properties that I bought has got a mortgage. I took up a mortgage because I wanted to test the mortgage market. For those of you who don't know, I'm also a qualified mortgage broker. And in the UK, my company brokered mortgage. We still do mortgages all day long. And we have been doing it for a long time. And so I understand the mortgage business inside out. So the parameters of mortgage financing in the UK are slightly different in other African countries. So I wanted to test how I can help my clients in Ghana obtain mortgages in Ghana from Ghanaian banks. So I decided to take a mortgage up in Ghana, and I still have the mortgage and I'm paying it. It's fantastic, but the rates are very high. I think I am paying close to 12% interest rate on that particular property. So there are mortgage, financing companies in the Caribbean and Africa, but the rates may vary. I know people who at the moment, Bank of England cut interest rate to 4.75%. The US had cut interest rate 3 different times, before even the Bank of England cut interest rate. So interest rates is relatively low in these European and UK and USA, Canada. So do not often compare the rates that you're going to be paying for your mortgage with the rates in Africa. The rates in Africa are higher because the money they borrow are at a higher premium than the banks in England and US what they borrow. So, perhaps they may have, a rating of maybe C or C minus. And if you have a bank has a rating of C minus, the cost of borrowing is higher, and they pass it on to the customers. So 12%, 13% perhaps might be the interest rate that you will be paying if you take a mortgage. And also, we have done mortgages for clients in the UK who are buying properties here in Ghana. And I can tell you the process is not for the faint-hearted. In the UK or in the USA, they take your affordability. You go look for the property. They take your loan to equity. If the property is £100,000, you probably pay a percentage of 10%, £10,000. The mortgage company will give you £90,000, but they will look at your income. They have the 4.4 rule. So 4.5 times or 4.4 times your income multiple, if it's equivalent to the £90,000 that the bank will give you, you pass. Then they look at your credit score. Your credit score, Xperia or Equifax or TransUnion or all the other credit companies, they will look at your credit. If your credit is okay, then another tick. Then they will look at your financial, remits. Basically, if you pay your rent, your mortgage, your electricity, your blah, 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 they look at your monthly and annual budget. If that is within a good standing, then fine. Your credit, your income affordability, and your income and expenditure, you pass. So mortgages can go from 2 weeks to maybe 3 months. Your mortgage is done and you got your property, start living in. In Ghana, it can take you 1 year. In Kenya, from speaking to some of the banks, it can take you up to 4 months. In South Africa, it's a fluid mortgage market, so it can take you 3 months, 4 months. In Kingston and Jamaica, in other places, yeah, it's the same as in Africa. You need to speak to the bank and they will do their credit checks. But what I also found is that these countries do not have their own credit check system. So they rely on the credit check system from the West. And that is another story I will get into. So yes, there are mortgage options. The price may be higher, but the returns and yields from the property is greater here than you will have in the West. And therefore, even if the interest is 12%, the property is able to wash its own face financially. My property that has the mortgage is able to make enough income to pay for the property, to pay for the service charges or camp fees, and to pay for the electricity and water, and still give me some profit. So yes, I do not rule out mortgages completely. But if you are overcommitted financially in the West, I wouldn't advise, because there may come a time where you will need to cough up your own hard-earned money from your job to be able to show up any default, any fall in the income or revenue or the mortgage that you are paying. So it is a risk worth taking. I took it and it's working for me because I know the business inside out. And the other alternative you can do is, if you're taking up a mortgage with interest of 12, 13%, you should be able to find out that the property will be able to make income to cover those costs, to cover the mortgage, to pay the mortgage and other costs as well. Property investing has to be long-term, not a short-term 9-day wonder. So if you're looking in the long term about yields and equity growth, remember, as you repay the mortgage, and in these countries, it's a repayment mortgage. There's no interest only. So it's a repayment mortgage. So over the medium to long term, 3, 4, 5 years time, the mortgage would have gone down, rental values would go up, and therefore you'll be able to have some margin of profitability. And going into the long term, the equity would also be building. So property investing is a long term. So mortgage options cannot be ruled out in these countries, but you need to take these mortgages with a risk caveat that says, do not take up any mortgage unless you know you can afford to pay it and unless you know that you are ready for it. So that is my recommendation about mortgages. Another way of financing your real estate investing in Africa or the Caribbean, and this is primarily for homeowners of African and Caribbean descent who live in the UK, Canada, Australia. If you are a homeowner in all those places and you have already got a property, then the chances are that if you haven't bought a property recently, chances are that there will be equity built up in those properties. And what we do with our clients in the UK particularly is that we would help them remortgage the property. So if the property was purchased, say in 2015 at £100,000, and now in 2024 the property is worth £180,000, you have got equity growth of £80,000. So if you go out there, we can help you to remortgage the property or to refinance the property. You can either refinance with your existing lender, or we can refinance the property with a new lender. So when you do that, out of the 80,000, you can extract about £140,000. Let's assume that the property value now is 200,000. Let's assume you bought it for 100,000. You've got another 100,000 equity. So if the company, the lender, is going to give you a mortgage, they'll probably give you a loan to value of about 70%. So 70% of 200,000 is the loan that they're going to give you. And then that 30% of 200,000 is about 60K. You can bring that 60K as your deposit for the property that you're buying in Africa or the Caribbean. And that way you can arrange the payment terms after you've put the big lump sum. Now, to do that successfully and to reduce your cost, you need to strike when the iron is hot. I would recommend off-plan purchasing. Before they lay a brick on ground, before they break ground, you go in and you put your money in there, knowing that in 2-3 years time completion would happen. So you would have bought yourself enough time to be able to make the rest of the payment on time. And that is how I finance some of my real estate investment here in Ghana. And it works very, very well for me. And in fact, as I speak with you, just August last year when I came here to bury my father and my uncle, both of them died within March and April. Two very important people in my life. It was a very traumatic period for me. But when I was leaving the country, I went for a property, and the property is still under development, almost completed, but I decided to invest in the property. I know that by completion time, the property value would have gone up, and so I can even refinance the property, use the deposit, put it into another property and all of that. So those are some of the mechanics that you need to do if you have a property in the country of residence in the West. It's easy. The interest rate will still be lower, 4.75%, 5%, whatever, and then you can reduce the cost of your borrowing here in the country of residence in Africa or the Caribbean. So I will recommend equity release with the purpose of not spending on luxury cars and holidays, but with the purpose of reinvesting in Africa and the Caribbean. Well, I hope by now you are getting the drift about investing in real estate in Africa and Caribbean. I have created a masterclass for real estate investment for Africans and Caribbeans in the diaspora in the African and Caribbean markets. And if you already have a property in Africa or the Caribbean and you need to monetize it, I have got a course about turning your property in Africa and the Caribbean into an ATM cash machine. I do that, and I think I can help you do it. So we're going to go on to another way of investing or financing real estate, and that is crowdfunding. In 2011, crowdfunding was one of the biggest way of crowdfunding. What is crowdfunding? Crowdfunding is when so many people invest small into a project. So crowdfunding took height in 2012, and I was also at the center of it. At the time, I wanted to crowdfund football finance, and it was called footyfunder.com. I went to Barcelona. That was before the London 2012. I took photographs. That was before Pistorius had his problems. I had photographs with Eric Cantona. I had photographs with 𝐄𝐦𝐚𝐢𝐦 of the Ghana Football Association. I had photographs with David Dean. David Dean was the owner of Arsenal Football Club. I had photographs with Kevin Keegan, then the manager of England. I have photographs with Kevin Campbell, who was a striker in Arsenal. So I had photographs with all these key people because they saw me as somebody who could help with real football finance. So crowdfunding was something that I was one of the key people in it, but I had to come out because they started bringing taxes and a lot of regulatory issues in the UK. At the time, there is a company called Crowdcube by one guy called Darren Westlake. Darren Westlake started Crowdcube with a co-founder, and I was in touch with Darren and all these people at the time. So crowdfunding is another way of funding your real estate. But a caveat: as Africans and Caribbeans, we are not very good at working together. So my caution is, if you are going to crowdfund your real estate, you need to know exactly what you're offering the people who are going to be depositing or putting money into your real estate. You can't just go crowdfund, take people's money and not offer anything back. There are a lot of EISs, investments, around that you can look at. But I'm yet to see or know of anybody who has crowdfunded real estate project in Africa. If you know anybody who has crowdfunded real estate project in Africa, please put me in touch with them. But my guess is this: if you're going to crowdfund your real estate investment, my thing is my next thing, which I'll go to, which is joint ventures. So instead of crowdfunding, I'll go to the next financing thing, which is joint ventures, which is JVs. What is JV? JVs is when you are able to partner with another financing company or another entrepreneur who is like you, who thinks like you, who has finances, or they have land and they want it built. So if you have land, you can go in partnership, a joint venture partnership with a financing company, a real estate company. They will take up your land, they'll build on it and offer you something in return for the land. These are some of the mechanics you can do to finance your real estate investing. So joint ventures and equity partnership, where you have partners who come with equity money from Dubai, from Arab world, from somewhere, to become partners into your real estate project. So that is what I'll recommend. I don't particularly recommend crowdfunding because I'm yet to see that it works for real estate very well. I'd rather go for joint venture and equity partnerships. Well, the final financing model I'll look at is your own way of financing, which is your savings, your credit cards, or loans from the bank. Borrowing from the West is cheaper than borrowing from here. A typical loan, personal loan in the UK is about 9%. A mortgage release, as I alluded to before, would be about 4.55%. So better to use your property. If you don't have a property, better to take a personal loan. But I wouldn't recommend any of those. What I recommend is your own internal savings that you have generated. Okay, savings that you have worked for and stashed in the bank. You will barely get 3% on a bank interest if you put your money anywhere in the West, USA, Canada, UK, Europe. You barely get 3% interest. Whereas even in Ghana, Treasury bills can give you up to between 20 and 25 or 27% on a 91-day rollover. So there are a lot of investment, dynamics that you can do. So if you've got £30,000 or $30,000 in UK or USA, you can't come and put it in a treasury bill in your home country. That can increase your money so that if you need to invest in real estate, you can use all of that to invest in your real estate. So savings, using your savings is what I recommend. And if you are over 50, 55, and you're near retirement in any of these countries, USA, UK particularly, I would advise that you look at your pension. You can take your pension early and reinvest some of it into real estate. Because if you invest some of your pension pot into real estate, you are diversifying your portfolios. You are diversifying your risk. Because even the pensions, they are not reliable. I know people who are 55, 56, who are going for their pensions in the UK, and it's taking them a lot of excuse me, it's taking them a long time for them to get these pensions. So it is not even guaranteed that you have worked for donkey years and your pension is just going to fall in your lap. So if you have an opportunity to extract your pension in the UK, USA, Canada, get it, invest in a property in Africa, and that that it is something that can get you real returns. Why I recommend Africa or the Caribbean is because that money may not be able to go far if you invest in a property in that home country, whether UK, Canada, or Australia. But you can go far. You can buy your nice, decent home in Africa or the Caribbean. And once you turn that into an income generating machine, you'll be getting dividends, you'll be getting money, consistent income coming from that, while a portion of your retirement income is also coming in. So these are some of the things that you can do to finance real estate investing in Africa. As I said before, I have got a number of courses and coaching programs. One of them is turn your property in Africa into an ATM cash machine. That I teach you if you already are a homeowner or you're investing to get returns on investment in Africa or the Caribbean. You can check my website, douglasoppong.com, and you can click on that and then we can get started. If you're looking to invest in real estate in Africa or Caribbean, I have got the Property Investor Mastery for Africa and Caribbean Diaspora. That again, you can click on that. And if you are looking to have service accommodation, I have the Service Accommodation Accelerator. That is for people who are looking to start real estate business or in Africa or the Caribbean without necessarily buying a property. You can run a business in Africa or the Caribbean in real estate without having a property. I'll teach you step-by-step guidance about what you can do in any of these programs. So do get in touch with us and we will help you navigate your journey into real estate investing in Africa and the Caribbean. Take care.